Welcome back, traders. Today is Sunday, November 23rd, 2025. The market thinks the AI chip war is Nvidia versus everyone. Well, that's wrong. It's Coke versus Pepsi. Nvidia is Coke. Broadcom is Pepsi. If you want to build an AI model without paying Nvidia's tax, you use Broadcom's custom silicon. This is a duopoly, and we're betting on the only real hedge to Nvidia. Quick disclaimer before we dive in. I am not a financial advisor. This video is for entertainment and educational purposes only. I analyze the charts to find the edge, but you must control your own risk. Always do your own due diligence. Now, let's look at the setup. Let's look at the battlefield. AVGO is forming a massive coiled spring right at $340. We have a volatility contraction pattern holding the 50-day moving average. The weak hands are out. The institutional accumulation is happening right here. This is stored energy waiting for a spark. We want to buy the quiet before the explosion. We are executing a pre-earnings run-up strategy ahead of the December 11th report. The goal is to front-run institutional positioning. We are buying the Feb 2026 $350 calls. Why February? It gives the Coil time to break out and protects us from the post-earnings IV crush that hits shorter-dated contracts. This is a play on momentum into and through the event. Here is the new reality. Gemini 3.0 didn't just beat GPT-5. It did it without Nvidia. It was trained 100% on Google TPUs, designed by Broadcom. This is the ultimate proof of concept. It signals to the entire industry that custom silicon works. Google will now double down on TPU production, and that revenue flows directly to AVGO. It's not just Google. Amazon is aggressively pivoting AWS away from generic GPUs toward their own custom silicon. To make those chips work at scale, they need world-class networking. Broadcom owns the SerDes and switching technology that ties these massive custom clusters together. Amazon's pivot is Broadcom's profit. Think of Broadcom as the toll booth. You want to build your own chip to fight Nvidia? You have to pay Broadcom for the IP. They possess the highest speed networking tech in the world. As hyperscalers spend billions to decouple from Nvidia, Broadcom taxes every single dollar of that transition. On December 11th, Broadcom reports earnings. The street expects a standard beat. We expect them to raise guidance based on this custom silicon demand. Our February calls are positioned to capture a blowout report and the subsequent January effect rally, allowing us to ride the momentum rather than being forced to sell. Patience is key. We are buying the quiet period inside the coil. Accumulate in the $338–$342 zone. Do not chase if it gaps over $350. Wait for the retest. Hard stop is a daily close below $325. If the coil breaks down, the trade is over. We trade the chart, not the feelings. To recap, the Nvidia monopoly is ending, and the custom silicon era is starting. We are betting the Silent King breaks out this December. If you want to catch these moves early, smash that like button and subscribe to GreenCandle. Let's hunt some green candles together. I'll see you on the next trade.